G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Please be sure to check out my links below, including exchanges I use and social media content that I post. Alright, let's go. So today's video is going over Bitcoin and the Pi cycle top indicator. Okay, we'll touch up on the risk metric as well to see where we're tracking with that, as that is a very core part of my strategy for Bitcoin in the crypto market. It's very, very powerful. So we'll look at that as well, along with the Pi cycle indicator. Okay, so I'll show you what it is first. So the Pi cycle indicator is a tool used in Bitcoin price analysis consisting of two moving averages, the 111-day simple moving average and twice the 350-day SMA. Historically, when these lines cross, it has signaled that we could be at a market cycle top within approximately 3 days. And a bit more information about it. So the Pi cycle top indicator was created by Philip Swift back in 2019. It gained great popularity when it was introduced and predicted Bitcoin's local top within 3 days back in April 2021. The indicator signals a top whenever the 111-day SMA crosses above the 350-day SMA. Okay, so the name Pi cycle top comes from the fact that the fraction 350 divided by 111 is as close as one can get to pi. It's 3.1415. It's very close to what pi is. The ratio number there to work out what pi equals is basically a circle. All right, the calculation for a circle, the area of a circle, and that's what these two moving averages do. Okay, so that is that. So that is the green and red indicator I've got on my screen here, and these red dots, as you can see. So I can go back to when it was first triggered. Okay, so you can see the two moving averages there. All right, I'll just show you on the indicator itself. So you've got the fast, which is the red, 111-day, and the slow in green, which is the 350-day SMA, and the sell signals as well. So that is that. So first up, we have a signal here. Actually, several dots when the red crossed the green there. Okay, and that was signal to sell right before we had a correction there. Okay, so we had quite a significant correction. And it signaled right around here. And bam, sold off. All right. Probably best to see in the daily because you want to see the 3 day time lapse. How close it marked the top. Okay, so there you go. It's a bit easier to see. There's several dots though. So you got the dot here that occurred. Okay, as soon as we crossed, you can see there. And I'll just mark it just around here roughly. Okay. So there's the first dot. As soon as we crossed, we had 1, 2, 3, 4, and then a sell off. All right, so pretty close to 3 days there, that first dot. And from that point, we sold off. Well, actually, these wicks sold off a lot more. It sold off 65%. You say to yourself, a big drop there. That wasn't even the first. That wasn't even the final, I should say, peak for the post-halving year. This is the first peak in that 2013 year, the first bull year, and would have saved yourself a 64% drop. And depending on whether you entered back when these EMAs cross each other, you would have got him back here roughly if you wanted to follow this strategy, and buy when it crosses back up, and then eventually you can see it triggered again here, and the dot occurred on this candle. And then 1 and basically 1 to 2, it was less than 3 days, and it marks the exact top. One candle from the top. So you had another dot here, which actually marked the top, and another dot there. So yeah, it was good, and you saved yourself a big drop of from this candle at the bottom, which is a 70% drop. So quite a big significant down. And actually went even lower if you zoom out. and went even lower. So 85% drop, excuse me. So you got out pretty much at the very top using this pi cycle indicator on its own. Just on its own. So it's very, very good there. So these indicated this peak, this first peak, and the secondary peak, which was the end of year, so Q4 of the post-halving year, which is when it generally marks the top for Bitcoin. Okay, that was the first one. And as you can see, the next selling point, the top indicator came in when the red crossed above the green here, as you can see, and the dot triggered around here. All right, just here. And that was the exact top, just about. There's a wick a little bit above it, but the dot triggered right here and amazingly caught the top 2017 as these moving averages cross over each other. And the price fell 84% after that. So, you did quite well. But the problem with this is it didn't give you a buying signal. See, the green didn't really, it did cross above the red, obviously, but you don't be buying here. You want to be buying down here. And you don't know when to buy it, which is the problem with this indicator. It's only good for selling, not buying. Like I did show you going back here, it told you to get in here, which was quite good. Right here, okay, in 2013. But you go fast forward to 2015, and the bottom was, these two bottoms, it didn't even tell you to buy. So don't use this as a buying indicator, it's good for selling. Right? As indicated here and here and here. All right, so it's done a pretty good job so far. And that's that. The next time it triggered was actually Q2 of the post-halving year. So 2021, so it's 4 years after the 2017 one, okay? So that was in Q4. This is in Q2. So it happened before this one, this peak here. And it didn't trigger on this peak. It triggered on the first peak, this pi cycle top indicator. So that was a little bit different there this time around. And if you zoom into it, okay, you can see the dot triggered right there. Is 1, 2, 3. Actually, 3 days, and then it dropped after that. Okay, so it was roughly 3 days, or a little bit more, and we had a 52% drop in the middle there. And then if you just waited, and you're the best timer in the world, 75% drop. Okay, so you saved yourself a 74 to 75% drop there. And did a pretty good job marking the top. Okay, got very, very close. Okay, did within 5 candles. You got the first one triggered here. 1, 2, 3, 4, 5. All right, 5 candles. Did pretty well there. If you use this indicator to get out, so that was pretty good. All right, so this 2021 peak, the first peak on the second one, which is quite odd, but it did pick up the first peak. The one only peak in 2017. The 2 peaks, so the first peak to the same sort of period, Q2 of 2013, we had Q2 of 2021, and then Q4 of 2013. So it marked the top, both those scenarios, and this one pretty much did, but it didn't get to the secondary peak. And right now, the higher cycle indicator, it's well spread out. So no top yet, okay, intermediate top here. You can see they're well spread out, and very similar to what happened to 2019, sort of well spread out. Okay, even though it sort of did come in from these was a big gap, they did squeeze a bit, but nevertheless, it never crossed over. Okay, so the red never crossed above the green, and it didn't call the end of the cycle. So as long as it occurs, okay, and you continue. That was obviously choppy period and a big down period. And eventually it did mark a top here, and then it did there. Okay. I didn't, but it diverged, okay? So I can show you on the risk indicator what that looks like. So you can't use one indicator on its own. So pi cycle indicator on its own, it's okay, but you got to combine with other indicators. And the more you stack, the better confidence you have, the better chance you are of getting out at the right times. So that one occurred, okay, and we haven't had anything yet, okay? So quite separation, and the cycle is playing out like normal, which is good to see. And the pi cycle top, that is that. So I'll just zoom in, and you got the risk indicator as well, by layered on top. It's just the oscillator, And as you can see, these blue boxes and these sort of pinkish reddish boxes, I've already drawn the chart. Pink, you got this nice buying area in blue. Blue, all the blues. There's a nice area here. Pink, blue, obviously nice long time buying there. And across here, it's early days, and then pink box here. This is all these levels, okay? It corresponds to the oscillator. So you can see it gets above the 80 level. So I've drawn out there in this red line, and you get the dots inside. Okay, and you need for me to see. So on the I like to go the 3-day time frame for this strategy. Okay, and if I go back to the start, I'll show you. So look at more or less topping indicators. So you've got 1, 2. So I see there's second dot close, and that's when you start buying. Okay. Oh, sorry, start selling. Sorry, got it wrong. Start selling. And then you sell. As you see, the dots are still in there. And when they come out, that's it. You stop selling. All right. And that's pretty much it. That's the top there in 2011. And the buying is just pretty much all the blue dots. And just follow all the way along. Okay. As you can see there. And it's the same thing here. You get 2 dots closed inside here. So you got 1 dot here and the second dot here. And the blue box started. And then I do have a blue line here to start buying. And that includes the MACD as well. So once the MACD crosses over on the oversold level, you start buying, okay? So that's a MACD crossover line that I've just marked out. And you just go cross. So you start buying the very bottoms. And you go up. And then it exits this blue channel. Heads up, you do nothing. And obviously this Pi cycle did mark a top here, but nothing happened on the risk indicator. So you sit on your hands and wait. And you wait until you get 1, 2 dots. Right, so it started here. And then you start selling. But really, you start selling once this MACD crosses. But I'm not going to show you the MACD. Okay, I'm not going to go too complicated. But this area is just showing you the shaded area here. Okay, so you start selling once you see the dots above 80. All right, until the dots come out, then you stop selling. All right. So that occurred while the Pi cycle top indicator flashed. So got 2 areas of confluence there, 2 indicators stacked up. And then you start buying again once it goes back into the blue channel. As you can see there, 1, 2 dots, and then boom, And it stayed on the blue for quite a long time, from January 2015 all the way to May 2017. So 2 and a bit years. Fantastic. Had a lot of, bit of fun there buying across here. And then the Pi cycle top dots flashed along with the risk metric, and you have the dots, 2 dot, second dot there. And then all these dots, you just sell as much as you can get out. All right. Your dollar cost average out of the market. And you get out pretty much at the top. A 2017 cycle. And obviously, I just mentioned the Pi cycle top. The blue box occurred here. You got the dots, 1, 2. All right. The box started. And then, you just buy up along there. Same thing here. 2020. It's just blue dots below. Okay. This 30 level. As you see, it stays below. And those dots on the line do count. And the dot closes like this, still in. And then once it's just in, then boom, out. And that's when you stop buying until it comes back again, like this box here indicated. And the dots obviously go back below 30. All right, so that's that. And then the Pi cycle top in 2021, the early Q2. And you also had dots suggesting the same thing. So you'd sell as well. And then the dots occurred again at Q4, which is quite odd, but it did happen. But these dots were slightly lower than these ones. So they were a bit higher than these ones. So you had divergence. So you had high price, higher than this one. This peak was higher than this one. And that was lower than that one. So the risk metric was indicating negative divergence, bearish divergence. And so did the MACD. So that's why you got that one. And then you got the dots. You sell as a sell. So you got 2 opportunities to sell. Okay. And the dots didn't occur here on the Pi cycle, only the top first peak. Then the buying, started 1, 2 dots in, and then nice accumulation there, all the way up to early this year, essentially November, just about end of 2023, and then you're not doing anything, sitting on your hands and waiting because nothing's occurred, okay, on the risk metric, not buying or selling or nothing. So same as the Pi cycle indicator, nothing's happening on both. So you sit on your hands, and anything you bought from down here is doing quite well. So congratulations if you did that. I haven't, unfortunately, because I discovered this strategy only this year, only pretty recently. So a bit of a shame, but, going forward, it should work pretty well, okay? So that is that, and those two indicators combined. And like I said, once you combine them together, and, like I mentioned, the dots occur, and the dots occur here above the A level. Pi cycle and risk indicator has signaled to get out. Same as 2017. They both signaled at the same time. And a top for 2013, December, and that's when you get out. Here you wouldn't have got out because it didn't show the risk metric, okay? But when they both flash, that's the time to get out, all right? Here's a bit different. 2011, it was a bit different. It's quite call it a cycle if you want, but it wasn't really a bull run. It was Bitcoin on its own back then, 2011. So really quite boring. But if you did buy down here, then you obviously did extremely well. You're buying it, basically 1 cent, then selling it $27, $30, pretty bloody good. So well done. So yeah, that is the two indicators, and I showed you saving the drops. If you did sell his Pi cycle top, an 85% drop, a 65% drop, and the 84% drop there, and then we've got the 75% drops. Okay, you save yourself the downside of, which is quite reassuring and quite good. If you are, well versed and unemotional in your investing, get out just when these indicators flash and don't care about what anyone else is saying. Just act like a robot, and you'll do quite well in this market. And yeah, and something to look at yourself to determine if you want to use it going forward. It's quite useful. The risk metric, I love that. It's my favorite indicators. And the Pi cycle tops are quite a good one too, to use it in conjunction with the risk metric if you want to stack indicators to form your own strategy. That's important, to make your own strategy for this next coming bull run. After the recession kicks in, we should come out of it hopefully pretty strong and off the races, and form past 120k Bitcoin, hopefully 200k. Nice big run for Bitcoin, and the rest of the market should do really, really well. Okay, so that is that, and these two indicators. All right, I hope you enjoyed this video. It's quite a simple one, a bit shorter one too. It's going over the Pi cycle top indicator. Discussing how it marks the tops for Bitcoin within 3 days or thereabouts, sometimes a bit longer, probably 5 days at the longest, and 2 to 3 days at the shortest. And one time it actually was one candle off marking the top. I think it was 2017. So yeah, it's pretty reliable indicator to mark the top for Bitcoin. And I did show you that it's best to use in conjunction with the risk metric. The risk basic metric is the Bitcoin power law mathematical calculation, and it's like the logarithmic regression channel that follows Bitcoin price at different risk bands, and it's a very intelligent indicator. And if you use those two in conjunction, it's very powerful. I do use the MACD as well. Okay, 3-day MACD. With my strategy personally, and yeah, you can combine whatever you want indicators. The more you add, the better. Okay, to give you more confirmation to get out and follow them like a robot, form your own strategy, and yeah, it's the way you can use them to navigate the crypto market ahead. So if you like this video, please smash the like, comment your thoughts below, subscribe to stay updated. Be sure to check out the links below, and I'll catch you in the next one. Cheers.